Welcome again. This is Pius Mushiri Mugo, the Managing Director of Nabo Capital, and we are continuing with a video series on money market funds. And today, I want us to talk about the landscape of money market funds in Kenya. And money market funds, as we agreed in the previous video, they make 85% of the entire collective investment schemes in Kenya put together, which are worth 64 billion shillings. So when you look at the landscape, we have about 18 active unit trusts that are offering money market funds. So I was looking at the statistics and I drew some very interesting insights. Number one is that insurance companies, they dominate the money market fund space. They command more than 70% of the entire funds managed under money market funds. And the question is why? And the quick answer that jumped at me is because they have huge distribution networks. They have the widest reach. They can reach almost anyone in the country. And they have, distribution networks of foot soldiers that range from, 1,000, 2,000, 3,000, 4,000 foot soldiers every day out there going to look for investors who might be interested in money market funds. So it's no wonder why they command the largest market share. Another very interesting insight is there are only 3 out of 43 banks that offer money market funds, and that is CBA, Stanley, and Equity Bank, which put together command about 8.7 billion shillings in money market funds. So it's quite an interesting thing that banks in Kenya have not taken up to this product yet. It's proven to be quite an important product in the developed markets. So this is probably a space that we'll be watching, and you might see a lot more banks coming into this space. The third set of players in this money market space are the fund managers, which are the majority, but they do not command a big number. They only have about 12.2 billion shillings put together. And the reason is because they are limited in terms of the distribution network, but we are seeing some very interesting trend. There is a new battlefront, and this is technology and digital presence that is increasingly helping fund managers to cover up their shortcoming on the distribution network. If you look at emergent fund managers like Saiton, Amana Capital, Nabo Capital, have quite some strong digital presence, and that is helping to cover the ground where they were previously not able to cover. And if you ask me, this could be an interesting development that could potentially overturn the tables in the coming years, and therefore watch this space. So those are 3 very interesting insights that I saw from the numbers that were recently presented by CMA. I'll be talking more about risk and return within this money market series. So please subscribe, and see you in the next video.